Traders from around the globe, what's going on? It's Friday, you know what time it is. That's right, another free real life stock review just for you guys. Let's dive in and take a look at what happened in the markets. So today we did get a little bit of a choppy day in the markets. We were looking quite nice and bullish. As you can see here on the shorter term moving averages, we were bouncing very nicely off that 20 EMA. And we were looking very nice and bullish until we got some news on Gilead Sciences not failing a critical test on the coronavirus vaccine. We'll have a look at what happened on Gilead in just a moment. But as you can see, guys, we were looking fairly bullish, and we have been having a little bit of weakness the last 4 days. So at this point, guys, I mean, we are really at a critical level. We have been talking about this in the afternoon swing trading floor about, being at the 50-day EMA on the daily, on the weekly chart. We've still got the EMAs ahead of us, and on the longer term moving averages, we're still battling the 100 simple moving average. So it makes a lot of sense to kind of just pause at this particular point, or maybe even have a short term pullback. So watch out for that one, guys. The SPY just pausing, having a little bit of a rest after such a bullish move. I mean, from the lows, guys, we have already come up a 30% just since the 23rd of March. And I mean, today is the 24th of April, so it's been 1 month in total, and we've come up 30% on the overall markets. Quite a substantial gain. Just look to lock in profits or, protect your assets at this particular point. We can obviously move higher. However, I do think that a short-term pullback is imminent. So here is the E-minis. Now, once again, guys, we did get some nice little selling candles the last few days. You can see here on the 1 hourly chart. I mean, this could potentially be a really nice head and shoulders pattern, guys. Just bear that in mind if you are looking to play this particular pattern. Wait for a close above the neckline right here, and then look to short on the retest. But that's the E-minis, kind of just trading sideways within this range. Not bullish, not bearish. I think the next few days, probably the next 2 to 3 days, are going to be very, very important, very critical about which direction we may go. From here, we will either break up or we will break down. Just makes the most sense in my opinion. Let's take a look at Amazon now. Amazon creating some new all-time highs just recently. Absolutely phenomenal. And they have not even had earnings. Now, a lot of people with coronavirus at the moment going on, there has been a lot of online activity, a lot of buying. So it makes sense for there to be such a massive spike in the market. Earnings is just around the corner. It'll be very interesting to see if we gap up. If we gap up or if we gap down, guys, I do expect a fade. What I mean by a fade is I think that we will trade in the opposite direction of the gap. If we gap down, I do expect us to trade bullish. And if we do gap up, then I do expect us to, lock in a few gains and trade a little bit bearish, just for more so for a day trade, guys. That is not a swing trade idea, more so for a day trade. As you can see here, we have come up 47% just in the last month. So very, 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 very wild times for Amazon. If you did go long down here mid-March, very great gains. You will definitely be looking to take your profits if we had a very nice gap up. Here's First Solar. Now, First Solar just looking like an amazing trade right now. We've had a beautiful double bottom come in. Here's your neckline right here. Beautiful retest of the neckline. Sensational volume coming in. I mean, this is ticking all the boxes for me. We do have the 100 simple in the way, and we also have earnings coming up just before the end of May, just before the start of May on the 30th of April. So it will be very interesting to see how we go. We have been rejecting the longer term moving averages of late, but on a weekly trend, guys, we are buying low. Alright, so if you are looking to buy and hold for a longer period of time, I get that you want to be buying at this particular price. I mean, last time we were down here was back in 2017, early 2019, we did create a very nice double bottom. If we get a gap down over earnings, guys, keep this one on your watch list. It will be a sensational buy if we came back down to $32 and some change. Here is iRobot. Now, iRobot is a official swing trade in the swing trading room. If you are a part of that, then Thanks for being part of our community. We did get a very nice entry right at the bottom of this particular candle. I mean, your boy here calling it out, getting a very nice dip right here. I mean, bouncing off the 100, absolutely sensational. Most likely will be exiting this position just before earnings. Makes a lot of sense. And with the market being where it is, I think having a small little gain at this particular point when, we're coming into the longer term moving averages, I think that is a very smart thing to do, taking some profits off the table. Now, Gilead getting a little bit of bearish news around midday today. Take a look at the 5-minute. You can see around midday we had, a very nice little head and shoulders pattern, which is bearish in its sense, but we did just get a massive drop as soon as the news came out about the fail of the critical test for coronavirus vaccine. So right now, guys, I'm not going to be bullish on Gilead. I think they could do with a little bit of a pullback. There was a very large spike, obviously, with all this COVID-19 news affecting the world. Gilead just marching on higher, back from 65 all the way to 85 in just a few months. Sensational move. However, not standing up to their promises of getting the vaccine has definitely affected them. So we have had a small pullback. I do expect us probably to pull back a little bit further. If you are looking to buy, $69 or $70 would be a great buying location. Coming off this beautiful previous resistance level right here, we would be buying off the 200 if we came down any lower. So I just do think that long term, the 100 simple moving average is a great buying location. Let's take a look at the All Lords. Now the All Lords just following Mr. Squiggles to a T. I did draw this in the afternoon swing trading floor on this particular day. Looking very, very saucy right now, throwing in some delicious hammer candles as we speak. Inside day close today. So it'll be very interesting to see how we trade next week. If we get some bearishness in the markets, the fact that we did have a bullish day today and we get a gap, if we got a gap down, it will be a very nice gap and go. And with the longer term, with the overall markets, if they were to go bullish, this would have a very nice gap up. So keep that one on your watch list on Monday, team. Here's CBA, and CBA, I have spoken about this, was a bearish pattern. We are currently in a bearish trend on CBA, closing a little bit below 59.28, which is a very solid support and resistance level. If we do come back down to about 54, I would be a buyer. It would be a very interesting level to start accumulating some sort of position. As you can see on the monthly chart, 55.24 is the 100 simple moving average on a monthly. Last time we were here was back in 09 after the GFC, so it just makes the most sense to me. Here's COL's ticker symbol COL. On the daily chart, you can see we are just kind of squeezing in this beautiful pennant pattern right now. Absolutely sensational, staying above the 100 simple moving average. I think this is going to be, a fairly slow sideways mover at the moment. Very much just trading with the market at the moment. Not a whole lot of bullishness, not a whole lot of bearishness, a lot of uncertainty in the market. So COL's, if you're going to look to buy COL's, just look to buy as low as possible. Here's APT. Now, this was a retest gap. I have mentioned this in the afternoon swing trading floor and in a couple of my trading reviews. We did come up to the long-term moving averages and rejected the price with an inverted hammer. I mean, guys, this was a definite target if you were looking at buying shares. If you did buy shares, this was definitely a target for you to, take some profit off the table. Even if it was just half your shares, definitely was a great time to start selling. As you can see on the shorter term moving averages, we are starting to look fairly bullish. We have had a nice little dip. However, if we get a gap down over the weekend, only if the overall markets do gap down, that should be, then most likely it will be bear city and we will most likely fill this particular gap. Here's crude oil. Now crude oil not looking so great, definitely feeling it at the pump, getting a little bit more cheaper fuel right now, but going below zero this week. and currently, trading at $16 a barrel. Not the most exciting thing. We are fairly bearish, a lot of overstock at the moment. So right now, guys, we have just been rejecting the 20 EMA and the 10 EMA for some time. So I do expect us probably to continue a little bit lower at this particular point. I am staying well away from oil long term at this particular point. If we do get a nice little consolidation, then most likely I would look to buy the dip on that one. Here's gold. Now gold looking absolutely sensational for a bullish move. We had this beautiful breakout and a retest. I mean, that right there is just your boy's hammer of Thor just bouncing out of here. I do think that we will start to see some high highs very, very shortly. Keep your eyes on this one and a lot of the gold stocks. Last but not least, we'll take a look at the Aussie dollar bouncing off the 20 EMA. Finding a little bit of consolidation, having this beautiful little double bottom. Will this break up and close above 64.64? Who knows? We'll find out hopefully next week, and we will analyze that one then. But I do think that we are in a current wave 5. We have had the 1, 2, 3, 4, 5 wave. Whether or not we can close above here will be everyone's question. So keep your eyes peeled on that one, guys. If you are looking to take some profits, 64.64 is a very key level for all you forex traders out there. And at that point, probably expect a little bit of a pullback. But that's just what I think about the Aussie dollar, guys. All right, guys, I'll be back next week. Have a sensational weekend. And if you're in the afternoon swing trading floor with me, I'll see you guys tonight, 7 p.m. And until next time, love life, live life, and trade it. I'll see you all soon. Bye.